Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Thursday, February 5th, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing. The S&P 500 settled at 6883, down 0.51%, while the Nasdaq 100 declined 1.77% to close at 24,891. Crucially, the session was driven by a strengthening U.S. dollar and broader risk aversion. But the real story right now is in the macro assets. Right now, the 10-year Treasury Yield is trading at 4.258%, down 0.47%. The US dollar index is up 0.14% at 97.63, while crude oil is down 2.26% around 63.67. Gold is also under pressure, trading down 1.69% at 4866.92. The dollar's overnight strength ahead of key central bank decisions is acting as a headwind for risk assets and commodities, despite a slight dip in Treasury yields. This dynamic suggests a cautious sentiment pervading global markets. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been mixed. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished down 0.88%, tracking broader regional weakness. Meanwhile, in Greater China, the Hang Seng rose 0.14%, while the Shanghai Composite declined 0.64%. The divergence here was driven by the Hang Seng's resilience against a backdrop of a weaker Shanghai Composite, potentially reflecting localized sector strength in Hong Kong. In Europe, major indices are trading with a cautious tone. The price action suggests investors are digesting mixed economic data, providing a subdued lead-in for U.S. traders. German industrial orders rose significantly while the slump for UK builders eased, yet price pressures remain strong. U.S. futures in the open. Turning to the U.S. pre-market, equity futures are under pressure. S&P 500 futures are trading down 0.67%, while Nasdaq 100 futures are down 1.02%. The relative performance suggests investors are rotating out of growth-oriented tech stocks, likely influenced by the strengthening dollar and the cautious global sentiment. The decline in Nasdaq futures, despite a slight dip in the 10-year yield, indicates that broader macro concerns, particularly dollar strength, are overriding typical rate-sensitive correlations. The Daily Catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the anticipation of upcoming central bank decisions from the ECB and Bank of England, which is currently driving dollar strength and influencing global currency markets. Second, the latest U.S. planned layoffs data from the Challenger survey, offering a preliminary read on the labor market ahead of next week's official jobs report. And finally, European economic data, specifically the stronger-than-expected German industrial orders and the easing slump in UK construction, which are providing mixed signals for the Eurozone and UK economies. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be lower, pending any surprises from the data releases. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.